And we kick it off this morning with markets. Wall Street this morning looking firmer. We are looking at a higher opening for the broader averages this morning, extending a late-day rally yesterday. Stocks getting a boost yesterday as the Dow Industrials right now up 91 points. The S&P 500 is up 6, and the Nasdaq up 7.5 points. Yesterday, U.S.-China trade optimism. The Wall Street Journal reporting that the Trump administration is considering lifting tariffs as a way to calm markets and get a deal with Beijing over the finish line. Joining me right now is the president and founder of Potomac Advisors, Mark Avallone. Mark, good to see you this morning. Thanks very much for joining us.
Good morning.
What's your sense of markets here? Have we turned a corner after that massive volatility last year?
Well, clearly we turned the corner from that Christmas Eve horror show that we saw, and the daily massive meltdowns that had investors quite nervous, and some of them even pulling the trigger. But I think we're overstating this hope or this hype out of China. Last I checked, Lighthouser and Navarro still have a say on things, and unless they've just totally capitulated to the Mnuchin and Kudlow wing of the Trump administration, I don't think that these trade talks are going to go super smooth. I think there's a lot of hope right now, and that's why you saw that late surge yesterday and some of what's underpinning the rally this year.
Yeah, but the broad story in the backdrop, I mean, it's pretty positive. The major indices are on track for their fourth straight week of gains following real volatility at the end of 2018. When I sat down with J.P. Morgan Chase Chairman and CEO Jamie Dimon last week, he was somewhat optimistic about the backdrop, and certainly I talked about the market in terms of the fundamentals looking good. Watch. You know better than I do, but when I think about things, the Federal Reserve makes a pivot. They say they're in no rush. Earnings have been pretty strong. We just had great jobs numbers on Friday, 312,000 jobs created. Valuations are better after the last 3 months. Yeah. Seems like we could be poised for a rip-roaring rally.
Yeah, that's why I think people react. I don't know about rip-roaring rally, but I think you're going to have decent growth in 2019 in America. And therefore, Senate may reverse course a little bit down the road. I hate guessing about the future. I run my business like serving you as a client. Right. And then we navigate the ups and downs of markets.
It could have been just a trade, but since that conversation, the Dow is up about 800 points, 3.5% actually, since that conversation. I mean, the Fed obviously is one of the big issues here, right, and what it's going to do. Do you expect the Fed to pull back on the unwind? That seems to be one of the issues for the market. They're worried about this unwinding of the portfolio.
Yes, I think the Fed got the message loud and clear, and I think that is why we've had this near 11% rally since Christmas. And I think the Fed pulling back does eliminate a huge uncertainty, and your interview with Jamie was spot on. Domestic earnings will be up this year. The U.S. consumer is strong. Valuations are reasonable. And when you take the Fed out, that leads to a positive environment for stocks. I'm totally in that camp. My concern is this wild card. You don't really know what's going to happen with China, and that's why people aren't backing up the truck. That's the hesitancy right now, because that can go any day.
You're right. No, the China story is an unknown. The other unknown is where earnings come out at the end of the day, because we had a great year last year in terms of profit growth, 26%, but it's expected to come all the way down to 6-7% in 19. So what's your expectation on earnings so far in terms of what we've seen and what you're expecting from the fourth quarter overall?
Well, that drop in earnings growth in 2019, or the expected drop, is what investors, by and large, should have expected. The tax cut wasn't an annual renewable boost to corporate earnings. And I think what we're seeing in Q4 is it's really a market of stocks and not a stock market. There's been mixed results. You saw in the financial center, people see a top line miss by J.P. Morgan, but then they realize it's a sound franchise. They bid the stock back up. Bank of America went through the roof. So I think it's going to be a market of stocks. I think people looked at the Netflix number. They saw one number they didn't like. They got nervous. I think when they look beyond that news noise, they're going to see that as a growing franchise. And just because they may miss on one measure of subscriber revenue, they shouldn't abandon good names and good news.
Well, that's a good point you make. Mark, it's good to see you this morning. Thanks so much.
Good to be here.
Mark Avallone joining us there.